We seem to be on, and thank you for persevering with us then, those of you who are already online. And welcome to this webinar today. Welcome to people who are watching us as a live feed on Facebook, Twitter, LinkedIn, and YouTube. Welcome. For those of you who are watching on a live feed to social media, if you have any questions, you'll have to send me an email so that I can get back to you. Thanks, Peter, at essbiztools.com.au. If you're watching this webinar direct on the direct link, please send me a message via going on to chat and asking your question, and I will answer you later in the webinar. For those of you who are watching this a little bit later at your own time as the recording, which we will send to everyone, if you have a question, you'll have to send me an email, peter@essbiztools.com. The past has no future. These are ominous words. And I think we need to look at it to understand what it fully means. Because these are the words that our clients have been hearing about a lot in the last 2 years. Challenging. The conditions were very challenging during the pandemic. Difficult. They were also difficult, weren't they? They were unprecedented. We hadn't really struck these sorts of problems for a long time, in Australia at least. They were demanding. So let's look at where we're likely to go in all this as we explore. I am having some trouble with the video here today, so I hope you're receiving it okay. We did have a problem when we first started, and I don't know whether that's been fully fixed. The new mantra for SMEs, I think, should be the past has no future. And that's why we chose that as a title for this webinar today. Thomson Reuters have produced a very interesting white paper that I think every accountant should be reading, which is titled Leading Australian SMEs in 2023's Changing Economy. There's no doubt that everything's changing. I've just finished preparing the ESS BIZTOOLS commentary on the federal budget, which was tabled in Parliament last night by the Federal Treasurer. Now, the headline response that the budget's now in surplus, I think, is a little bit misleading. That's been helped by an $80 billion surprise addition from business activities undertaken around Australia. And the unemployment rate is forecast to increase from 3.5% to 4.25% in 24 and 4.5% in 25. So I think there's some real difficult conditions ahead for our SME clients. I think you need to be gearing up to assist your clients by focusing on strategies that can bring growth to revenue. What can your clients do that will increase their revenue? And profit is the key. Obviously, it's no use just increasing revenue if there's no associated profitability being created. So let's look at the challenges that are there for our clients at present. Cash is tight for many. There's no doubt about this. The debtors days outstanding figure, which seemed to get reduced a little about a year ago, seems to be increasing again. There's been increased exposure in the media and in articles about the lengthening debtors days outstanding. The Thomson Reuters report identified that online training is very important for the SMEs team. Now, this works both ways. The concept of online training, as discussed in the white paper, is that your clients could in fact be conducting online training themselves to their clients and prospects. And indeed, so could you as an accountant. Some of this activity could create revenue, good for you and maybe for some of your clients. The SMEs that were surveyed as part of the Thomson Reuters white paper were very emphatic in that they had to grow to survive. And I really believe that's true for all of us. So how are you going to help them grow as their key financial advisor? So we need to understand these challenges. Adjusting and adapting to changing market conditions is important for your clients, but it's also important for you. And I think that's one of the big challenges that accountancy industry's got, is responding to these market conditions that are out there. So how are you going to help your clients identify market opportunities? It's an interesting question. But if you're working on a full-time basis as the chief financial officer in a larger organization, you'd be expected to be contributing to that sort of discussion in the leadership team meetings. I know that because I was the CFO, company secretary, of a listed public company. There were 9 members of the leadership team, and I was at most of the meetings, if not all of them. And I was expected as the chief financial person in the organization to be having a viewpoint on a whole range of issues, from helping to identify new market opportunities, undertaking the feasibility studies, or reviewing the past financial performance of a business we had some interest in acquiring, and then trying to work out how that business could fit into our company's culture and organization. Would it be manageable? Was it within our supply capabilities to support them? And let's look at inflation. It's currently over 7%. The Federal Treasurer said last night that he believes this is going to be reduced back to 2.75% in the next 2 to 3 years, which will be back within the Reserve Bank of Australia's band as what they're trying to achieve. But I don't think SMEs should be sitting back waiting to see if that's correct. We need to make our own waves in business, and so do your clients. And many of them are going to need your input. Can't rely on the government to deliver it, because there's been a lot of questions raised about a whole range of issues in relation to the budget in this morning's news articles. And controlling inflation is obviously very difficult. So it's one of the big unknowns, and the worsening problems in America don't help the situation. Interest rates rising. What does this do to your client's cost of running a business? Is your client got large debts that they're paying these higher interest rates on? Client trying to earn more money from their business because of their home mortgage situation, where they're obviously paying higher interest rates. We've just talked about unemployment a bit earlier when I said the budget papers predicted going from 3.5% to 4.25%, and by 2025 to 4.5%. Yet at the same time, there are thousands of job vacancies in Australia. So how's this whole mix affect your clients? Some SMEs and farmers around Australia are really struggling to get labour to pick crops or to pack crops or to undertake tasks that no one else seems to want to do. And yet we've got thousands of people that are unemployed. In fact, the government's increased the payments they're going to make to them in last night's budget. I noticed there's been some critical comments of that. saying, if we've got all these people, why aren't they out working? There's a lot of job vacancies. So how does this going to affect your clients' plans for the future? It's interesting to note that the government is confident that migration is going to increase substantially back to even higher levels than what it was occurring in 2019 before we had the COVID crisis. So how's all that fit together? In the Thomson Reuters white paper, they talk about team training. And I think this is very important. But team training is important for accountants, of course, to help you attract talent and retain talent. But the same situation applies to your SME clients. They need to get the best possible people that they can employ to work for them. And I'd suggest that you're talking to them about that, and hopefully you can show them that your talent attraction and retention policies are working, and show them how. I think it's a lot to make sure that the younger people or the new people in an organization have been encouraged to understand the firm's systems, its policies, understand who the customers or clients are and how they need to be serviced. I mentioned before that debtors days outstanding are increasing, and this is one area that you could help your clients by reducing the debtors days outstanding. You just don't do that. Of course, you need to check the systems to make sure that invoices are being forwarded promptly throughout the month, not left to the end of the month. That the due date for payment is clearly shown on the tax invoice. That a reminder SMS goes out a couple of days before the due date for payment. All these modern type communications should be looked at and used by your clients, because the key aim should be to get payments made when they're due, not 3, 4, 5, 6 weeks later. Because that's what causes the cash flow problem. And there's no doubt that cash is going to be very important. The old saying, cash is king, is very much appropriate to the current trading conditions that many of our clients are suffering. So, confronting the future. I think the author of the white paper for Thomson Reuters really hit the nail on the head. For many SMEs, the past is no, guys, because we're going into some uncharted waters. Businesses need to know more about their key performance indicators and their data. There's been a number of articles on in the Financial Review website over the last couple of months about the need for businesses to be getting the correct data. They're not actually using key performance indicators as a terminology. They're talking about data. That's why we both of them together. Now, I know from my experience in a listed public company how important this daily information, the KPIs are. It can vary. It can be average sale. It can be the productive percentage achieved. It can be the wastage percentage. On their own, these figures don't mean much. So if you just looked at a average sale today was $21.81, it doesn't really tell you much, does it? But if you've got a complete summary of everyday sale for the last 5 years, and the average is closer to $37 instead of $21, you would expect that you and people who are looking at this information would be reacting, wouldn't you? Especially if you scanned back and saw that even when it did dip in the past, it only dipped down to $28. So why is it now dropped to $21? And this is what management's key role is to explore these things, to find out why, what's caused this. There might have been a road closure in the close proximity to your client's business, and that meant customers couldn't get in. Well, that's great. They've got a reason, but they need to find that reason, and they won't find it unless you'll help make sure that this information is being produced in a proper manner, promptly every day, and is sent to the key people, the leadership teams within the business who have access to it. So this is why it's so important that when you're looking at the past has no future, that we're trying to make sure your clients have appropriate systems to help them meet today's challenges. And many of them require this sort of information, daily, weekly, monthly. Daily, weekly, monthly. It's very important. I don't think the annual set of accounts that you do a lot of work on as accountants and the tax return help your clients run a successful business. It's their accounting to the Australian Taxation Office as the agent for the Australian government that information is being prepared. Businesses need a lot more. They need it daily, weekly, monthly. That annual accounts really is not giving them anything, because you're probably still undertaking work in respect of the year into 30th of June 2022. Or if you're not, congratulations, but plenty of accountants still are, what I'm hearing. So how does getting a set of financial accounts now for the year into June 22 help a client run their business in the challenging conditions that we're facing in 2023? That's the past. The past has already claimed many businesses already through insolvency that have really risen this year. SMEs need help now, not in 12 months' time. They need it now. And a sobering thought is it's only 51 days to the 30th of June. If I did my sums right last night when I was preparing the outline of these PowerPoints. So SMEs need planning assistance. I think you should have a discussion with all of your business clients as soon as possible. What do they want to achieve? Is it realistic? And if it's not realistic, you might have to have a conversation with them, of course. I think the crucial document is the business plan. Unfortunately, thousands upon thousands of SMEs haven't got written business plans. A business plan is not an easy document to write. And a lot of people hesitate and get a bit worried about writing it for their own business. It's where you, as their key advisor, as virtually the CFO for their business, you can write it for them. Sit down, get their input, talk to the team, and then prepare it. Because that's going to identify the key activities that have to be attended to in this business. Part of that process is to make sure a marketing plan and a market strategy is being prepared. Now, many of our accountants are not going to want to undertake marketing work, and I can understand that. But make sure the client's appointed a marketing consultant or has someone who can write the marketing plan, because it's so important these days. You know, 30 years ago, marketing was a fairly unknown science or activity in Australian business. I can remember in the public company I was with when we employed our first marketing manager, we were in for a big shock because he insisted that the whole leadership team be assembled one day. He hired a local function facility in a big motel, and he took us there, and he had all of our cartons there from all over Australia, and each of our activities seemed to have a different colour they used and a different spelling and how the business name looked. That was a real cultural shock because everyone was just doing their own little thing. And what he was looking at is, what does these cartons convey to an overseas customer in Japan, USA, Europe, China? What's it showing to them? So it made us really pick up our game and make sure things were coordinated. Letterheads, everyone had different letterheads in the organisation. Prepare budgets for each business activity. I think that's important. If your client's got half a dozen shops that they're running all over the place, don't put them all in one profit and loss account. break them down into 6 separate P&L accounts so they can really measure the performance in each activity. If at the end of the year you need to consolidate them to get to the bank or something, well, do a consolidation then. But every other time, I think they should be in separate business units so that you can analyze and have separate key performance indicators for them all. If you're in retail, gross profit percentage, average sale, labour to turnover, they're the important figures. So that there can be some ongoing review. When you're doing budgeting, you need what the industry calls key drivers. These are the sub-accounts that are vital to preparing accurate budgets and cash flow forecasts. This is predictive accounting. And this should be the main activity that I think accountants are involved in, showing your client what's going to happen in the future so that they can think about it and change their style or change what they're going to do. So the key drivers are the projection on debtors, and all importantly, calculate the debt, what the debtors' days outstanding will be, and say, is that good enough? If you calculate and you get 58 days, I think you should be saying that's too high. It needs to be reduced. Creditors, very important that the creditors' days outstanding is monitored, especially if your client is securing supplies from a unique source. And that unique source has said, well, I'll supply you exclusively for the state of Queensland, but my payment terms are cash 30 days. Now, if your client's running along just casually paying on a 45-day basis, there's a real possibility that that supplier might decide that he will start or she will start dealing with someone else who will abide by the payment terms. And then your client's really potentially in a lot of difficulty. What's the inventory? What's the stock turn rate? What was it budgeted at? Is this company or business just merrily going along accumulating stock? You've got to sell stock. You've got to get it cleared. It's got to get converted into cash as soon as possible. Who's the team? Look at the team. Look at what the costs of the team are going to be. What are the energy requirements? And how do they fit in with the pronouncements we're receiving from government agencies? Seems to be coming out every day, don't they? And then the preparation of projected balance sheets. The projected balance sheets is a vital component of the predictive accounting process because it enables you to sit down and have a conversation with your client and say, this is what this business is going to look like in 2, 3, 5, 10 years, if you want to go that far time. It might give the client some hope that all this hard work at present, research and development, expanding the business, new capital expenditure, training of the team, putting in proper leadership training for the leadership team is all going to be worthwhile because this is what our picture is going to look like in 5 years' time, 10 years' time, or whatever. Right, keep the owners sane in a business sense. So establish an accounting system so the client can receive reports. I've emphasized to you daily, key performance indicators. Some of the information I've talked about, but make sure the client's giving you their views on what this information should be. Weekly comparison report and a weekly performance report and a profitability report, I think are vital. The public company that I was with, the CEO ran their business on the results of the weeklies. He used to get them by Wednesday lunchtime every week, wherever he was in the world, literally. And he would ring his regional managers and some were directors and discuss the weeklies. We still prepared monthly financial accounts, of course. And the only comment I used, or the question I used to get from him at the end of each month, just before the board meeting, was, did the weeklies reconcile with the monthlies? In other words, have we proven by the monthlies that the information he'd been getting from the weeklies was correct? Now, in actual practice, we tried to make sure that we were within 98%. It's amazing how many things can be calculated on a regular weekly basis when you think about it and put into a financial performance. But that was the best way to get reaction, because the actual manager of that activity, whether it was, and we were in the meat industry, so it was a meat works with 1,000 employees, or it was a butcher shop with 20 people working in it, the person in charge of each of those activities received their report. This was the turnover, this was the gross profit percentage, this was the average sale, this was labour to turnover, all, and this was your bottom line figure after rent, advertising, promotion, and head office charges and everything were reflected in it. Isn't that what your clients should be getting? I think it is, if we are going to help them meet the challenges. And that's why I'm using this theme, the past has no future. Because many of us have really not done that in the past, have we? We've not gone through this process with clients. On the monthlies, the individual business units profit and loss account compared to the budget. And then on a monthly basis, we can get things like the balance sheet evaluation to see how things are going. And me. And then look at how this business has been funded, because this is one of the other key items mentioned in the Thomson Reuters white paper. Does the business need more funds? Is that because they're expanding, or is it because they've got to build up stock levels because of the Russian invasion in Europe and they're having trouble getting stock or whatever? Do they need more money? They want to borrow money. If so, have they got security they can offer to the lender? And they will need that business plan, budgets, cash flow forecasts, projected balance sheets. Or do they think they'd like to invite some other people into the business? You could discuss with them Section 708 of the Corporations Act, whereby they could raise up to $2 million in a 12-month period, but from no more than 20 investors, without having to publish any sort of prospectus. It's good, it's easy, and it's quick, but it can't be done with any publicity, can't be written up on Facebook. Crowdsource funding equity raising, far more liberal in its approach. Company with a turnover of under $25 million, gross assets under 25 million, not on a stock exchange, anywhere in the world can raise up to $5 million. There is a process, of course. They have to agree to appoint a business that has the title of a crowdsource funding intermediary, who's been licensed by the Australian Security Investment Commission. But there is a process, and ESS BIZTOOLS subscribers are able to utilize a full system that we've developed to assist them to do that. And last but not least, we have early stage innovation company. Now, this is deliberately targeted at a young company that's been involved in innovative activities. They've developed a new product, process, or service. In the main, they have to be under 3 years of age. There is some basis that some of them can be up to 6 years of age. Turnover has to be under $200,000 in the previous 12 months and expenditure under $1 million in the previous 12 months. So it's a little bit different, but there's some incentives, there's some carrots for potential investors, and that's why the government introduced it. The previous Liberal National Party government. And it was under the Prime Ministership of Malcolm Turnbull, who was very much aware of the problems that young startup companies have of getting started, being able to raise capital. So it's worth looking at. So that's the funding opportunities you might look at for your clients. Now let's look at some of the others. When you get into it, you'll find that many of them are not doing their pricing strategy. So looking at the tradies charge out rate, how do they work out what they're going to charge out an hour? Is it just a matter of plucking a figure from somewhere? Or is it a calculation? Same thing for professional service firms, charge out rates. And in the retail wholesale industry, you've got a different configuration because you're not charging labor, but you've got a whole range of stock, and some of it's star stock, some of it's a cash cow, some of it's a problem mine, and some of it's a real disaster. Who ordered that? Might be the question. Within ESS BIZTOOLS, we've developed packages which will assist you to advise your clients on these things. So the monthly financial report that I think you can prepare, gives an analysis of how the performance has gone, the key performance indicators, what's the working capital position, report on capital expenditure, report on research and development projects if they're undertaking them, and an update of what the profitability is going to be for the year. We've now got actual figures to the end of April, and we're looking at what the forecast now is to the 30th of June. What's the emerging tax debt going to be? And when will that have to get paid? These are the sort of questions that the board of directors or the board of advice or the leadership team should be asking so that everyone knows what's going on. Most SMEs are not receiving this type of information. If you're providing this for your larger business clients, congratulations. But unfortunately, many accountants are not doing so. I think the new strategy should be that you're establishing this system built around 52 weeks of the year or 12 monthly cycles, preferably both, the 52 weekly processes, which in some industries will include daily. And then the 12 monthly cycles of the year, so that this keeps on going. And at the end of the year, sure, their annual financial accounts are prepared and their tax return to be submitted to the tax office. What's your key role? I'd like you to be talking to your clients and saying, we will set this system up for you. We will train some of your team to do parts of the work. I think the daily type KPI work should be done by the client's own staff. If they're not doing it, they probably haven't been shown how to do it or trained. But you need to have a watching brief on it, so a copy of it comes to your office every day. Yes, email. But your own team should also be trained in the understanding of how this business operates. The key is that your client will be receiving regular information, daily, weekly, monthly, and that's the cycle. And at the end of the year, that's just something else that happens. They get an annual set of financials and the tax is determined, but that could have been worked out each month, as I said before. What's the profit? Add the budget for the rest of the year. What's the emerging tax bill? That's what a lot of public companies are doing all the time. So all this is significantly different to the client just getting an annual set of accounts and a tax return. I think the message from Thomson Reuters in delivering their white paper is the past has been rejected. What accountants have been doing in the past has not really helped the clients go further in their business. So we need to be doing this to help them survive 2023. Now we can assist. We've developed systems for everything that I've discussed with you today. and we've already discounted our prices. But we are committed to helping accountants supply these types of services. So our advanced package, which includes everything that I've referred to today, we had reduced to $2,799, including GST. And the starter package, we had reduced to $1,699. But we want people to come on board. So we have got a special federal budget offer. And you're also going to receive not only a subscription, but we have a holiday package of 3 nights accommodation, which will come with each subscription. So we're offering a further 10% discount on those prices that we just mentioned. So the advanced package was $2,799 less 10%, that's $279. And the starter package was already discounted to $1,699, and we're taking a further $169 off. Now, all you've got to do when you go to the ESS BIZTOOLS website, www.essbiztools.com.au, is enter in capital letters ESSBT 10. That's there clearly on the screen, ESSBT 10. And the system will discount that further 10%, and that's the amount that you've got to pay, and you'll have 12-month access to our system. Now, this special offer is all linked to the federal budget, so it expires at midnight on Sunday, the 14th of May. I hope to hear from you. So to subscribe, all you've got to do is go to www.essbiztools.com.au, and obviously while you're there, you can look at the summaries of what's included in our total package. If you want to know more, why not visit our website, where I've just given you the details on, or you could contact us. Send me an email, peter@essbiztools.com.au, or give me a phone call, 1800-232-088, and we can arrange a Zoom meeting, 45 minutes, no obligation, no charge for that. And we'll see how I think we could help you introduce this type of approach to your clients. How does all that sound for a deal? I'm very concerned that we are getting very close to the 30th of June, and not enough people have committed to trying to fix the problem that Thomson Reuters have clearly identified that is affecting Australian SMEs. This is our contribution to trying to fix this problem. But you're the key workers in the whole thing. So next week, we have another webinar on Thursday, the 18th of May, Driving Business Growth. I think you'll find that interesting also. And it's a continuation of this theme of analysing in detail the Thomson Reuters report. And by then, we might have the Commonwealth Bank Accounting Market Pulse report that traditionally is released in May each year. And if it is, we will be having a discussion on it as well. So thank you very much for your participation today. I don't see that we've got any questions. If you have any questions that you think about later on, please send me an email, peter@essbiztools.com.au. And we will send our CPD participation certificate out to the people who have been watching this webinar today. So thank you very much. And I do really look forward to hearing from you if your firm wishes to become a subscriber, so you can utilize the services I've described to really assist your SME clients to scale up their business operation in 2023-24. Stay safe. Have a great day. Goodbye.